Okay.
Maybe we'll give another minute.
Okay.
Actually, I'll go ahead and get started. Well, good morning, everyone, and welcome to our inaugural First Fridays webinar designed to provide value-added information for our clients. This is Daryl Groves, and I'm thrilled that you are able to join us today. During our 2016 summer strategy session, we thought about what would help our clients the most in achieving their goals. After much deliberation, we settled on offering live monthly webinars as the best vehicle to use, as it will save you one of your most valuable resources, your time. We'll be recording these webinars and we'll make them available later for viewing online. The format of our webinars will include the following. All participant lines will be muted, but questions can be raised during the presentation using the Q&A comment box. We will make every effort to answer questions during the Q&A session. Any additional questions will be answered offline. We will also be using polling questions as a means to gather information from our audience. As always, you're more than welcome to set up one-on-one meetings to cover any additional questions that you have regarding your tax, accounting, and other financial management needs. So as I mentioned, we will be conducting a few polls throughout the webinar. So here's a test poll to get you warmed up.
Okay, so you should, hi everyone, this is Wendy. You should be seeing a poll that popped up on your screen for the Texans' chance of winning this weekend. And so as you go, just please click on what you think the percentage is, and then we'll go ahead and close it after.
Yeah, so some of you be watching the kickoff for the NFL playoffs this weekend, and we know that there will at least be two postseason games in Houston this year, with the first being tomorrow afternoon with the Texans take on the Raiders of Oakland, and the second game being held about 4 weeks from now in the Super Bowl. So I think we're looking pretty good here on the poll so far. We got some right answers. They say that there are no wrong answers, but in this case, maybe there are. But but anyway, yeah. So for those who answered D on the question, we're going to be sending them back to the webinar lobby. But anyway, just kidding. We can't do that. Your responses are anonymous, so feel free to respond as we go through. So we'll have about a total of 5 polls throughout the webinar, just to kind of keep you engaged and and then also to give ourselves some information about what you're thinking or how you're structured. All right. Let me go to the next. Okay. So next up, what we wanted to do is to give you an overview of DWG CPA. So for those of you who are unaware, DWG CPA is a full-service CPA firm. We provide tax, accounting, and audit solutions for small businesses, nonprofits, and individuals. Our primary goal is to save you time and money. I am so blessed and truly thankful to be working with a fabulous team of dedicated professionals that are focused every day on providing the best service to our clients. Joe Martinez heads up our accounting team and works diligently to make sure that your financial statements are prepared accurately and timely. Wendy Pineda has recently taken on a new role as our tax lead, focused on ensuring that our annual tax return filing processes run smoothly and efficiently. Simone Duncan and Emma Martinez provide accounting and tax support for the team. They are on the front line, making sure that we begin with the end in mind. Ellen Hughes is our firm administrator, and we kind of call her our traffic cop. She makes sure that our firm runs smoothly, taking care of our finances, our payroll, insurance, etc. So feel free at any time if you have questions to contact any one of us. So our guest presenter today is Austin Tennett. Some of you may know Austin, but if not, this slide provides an overview of his background. Austin Tennett is a certified business coach with the Focal Point Coaching Organization. In coaching small and medium-sized businesses, Austin focuses on 3 drivers of profitable, sustainable, and exponential growth, which are strategic direction, customer experience, and team dynamics. Prior to Focal Point, Austin was a successful business development executive with 2 of the world's largest professional services firms. Prior to that, he ran a $42 million P&L and received global recognition for turning around this business unit with an $8 billion services firm and created a corporate strategy function for the same firm. A native of Southern California, Austin holds a BBA in accounting and earned an MBA in finance from UCLA. We have promised not to hold his affinity for California football as they listen tomorrow afternoon against him. I'm pleased to present to you Austin Tennett.
Well, Daryl, thank you so much. Appreciate you having me, and most importantly, hang on a second. Let me. Okay. Hang on a second. We have a little technical difficulty here.
I can present and then just go ahead, Austin, and take over as presenter at the top.
Okay, there we go.
Okay, and then just so that everyone knows, at the bottom left-hand part of your screen, you'll see a Q&A tab. So if at any point while Austin or Daryl are presenting, go ahead and if you have a question, just go ahead and ask it there, and then click on back to the presentation, and we'll answer all the questions as it goes.
Okay, great. Thanks, Wendy. Thanks, Daryl. So our chat for today is building the robust enterprise. And so what this topic is really about is a collection of insights that I've gathered from both my fellow coaches and from my client base. So if you think about and so I'm sorry, just a moment, a little bit from our sponsor of the Focal Point Organization. So the Focal Point Organization was started by Brian Tracy. Not sure if that name is familiar with you folks, but Brian Tracy is considered to be one of the leading experts on small business and personal improvement. Much of the intellectual property that we use in our coaching practice has been developed by Brian Tracy over his 40 years in the personal improvement space. And Brian's the author of about 70 books, and it's estimated that somewhere between 4 and 5 million people have participated in his various programs. So building the robust enterprise. If you think about it, Daryl and I are really in the same business. He's working with his client base to build stronger financial platforms and frameworks for his clients, and I'm doing the same thing in some of those non-financial areas. As I mentioned earlier, the insights that I share to you are things that are it's real world, not textbook, gathered from the front line from my fellow coaches and from the clients that we coach. So what the genesis of this idea to talk about this was when Daryl had approached me and said, "Hey, also I'd like you to be part of this webinar today," and he said, "What are you seeing out there that might resonate with my client base?" And I immediately came back with, what we see, Daryl, often is when a business owner gets started, He or she will bring a strong technical expertise, whether it be maybe from a sales perspective, an ops perspective, or maybe they had worked with a competing firm in another life, and they bring that to bear in this entrepreneurial or this startup situation. But oftentimes what happens after they've achieved some level of success, they'll show up on our doorsteps and say, hey, look, I'm really good at sales, I'm really good at operations, but the other parts of the business, how do I get my arms around that so I can so that too can be successful? And so that lends itself to a metaphor that we often use at the beginning of a relationship with a client, and that's the concept of the Parthenon. So as many of you know, this should look pretty familiar. The Parthenon is probably 3,000 plus years old. It's a well-built structure that's withstood pretty much every natural and unnatural calamity that the local folks have put up against it. But it's stood the test of time and is still standing today. So what gives it its strength? So if you think about it, if you can see from the picture, the Parthenon is a collection of, is supported by 130 plus pillars, both on the external and internal of the business, internal to the structure. So if you think about it, your respective businesses are very, very similar. It stands on a number of pillars that give it strength. So as we see here in the business setting, here's the typical pillars we see: sales, marketing, operations, customer experience. This is what supports our respective businesses. And it's probably no surprise to you when we go into operations and we often see that one pillar is stronger than the other, and that's typically a result of the amount of time, investment, focus that the owner or leadership team has placed in that area. We always caution folks about with this particular chart, because even though these are pillars, if we're not careful, they can become silos. And of course, I think we all recognize that silos in business can be problematic if we're including some and excluding others. The corollary metaphor to the Parthenon is this concept of the watch, because if you think about our businesses, it probably has as much significance to a watch as it does to the Parthenon, in that a watch has many, many moving pieces that have to move in harmony, synchronous, in order to deliver time. So what happens is, and we'll talk about this a little bit later, the idea of a watch is not to overemphasize one of the moving gears or one of the movements, because if you do, then you start getting 23-hour days or 45-second minutes. So the whole concept is, how do we bring the various pieces together, making them strong in their own right, yet providing creating some harmony, so we have the right output. And that's why that's the measure of success with the watch, is the correct time. And for each of you in your business, there's some other critical measure of success as well. So oftentimes, when at the beginning of an engagement with a client, we'll talk about getting better, improving, and that sort of thing. And oftentimes, what we'll see is that the owners will want to go out and create 20-30% improvement in sales, or they want to maximize some other area of their business or their practice. And so this is when we often bring them back to, again, this whole concept of the pillar, the watch, that it's not really necessary, and sometimes even inappropriate, to try to maximize one part of the organization at the expense of the other. Because oftentimes we'll see a company will have a large run-up in sales, 20-30% increase, but then it creates challenges for other parts of the organization. So a much better approach, as you see here, is rather than trying to blow out a particular area of the key activities, let's focus on making several of these areas more efficient, more productive. And as you see there, if these series of 10% improvements against these various areas of activity, you can easily find yourself doubling your profit. And I think that's what most of us are concerned with at the end of the day is, top line is important, but what we take home and what we're able to put in the bank is probably equally more important. So just a really quick example on that is that if we were to look at the let's look at promotion and referrals. So if you were to look at your client acquisition costs, let's just say for a professional service firm, let's say every new client you bring on, it costs you about $2,000 because there's wining and dining and brochures and so on and so forth. But if you were to put some emphasis around the referrals, and let's say referral, because it's coming from a trusted client or colleague, the cost of acquiring that client is only $200. So now you've created this $1,800 delta between using your normal promotion approach versus focusing on referrals. So that's $1,800 per client difference by focusing on referrals. So over 10 clients or 20 clients that you might bring in over the course of the year, you can see that money could really add up. Okay, so I'm going to turn it over to Wendy, and we've got our first poll question.
Okay, the poll question has been populated, so just take a second to pick, if resources were not an issue, what area of your business would receive the most investment in 2017?
And then when we talk about resources here, we're talking about money, time, talent, that sort of thing.
Okay, I'm gonna go ahead and put it back to the presentation.
Great,
That
thanks so much.
everyone's done.
So
No.
the top one is adding new clients. Okay, great.
Mm-hmm.
So as we talked about in the previous slide, we mentioned the whole concept of measurement and focusing on improving small things. One thing I always caution my clients is, are we measuring the right things? Because because intuitively or intellectually, it all makes sense. We can't manage those things that we can't measure. So measurement becomes really important. But there's a little tail. Yes, sir.
Go ahead and take over as presenter.
Okay, I'm sorry.
That's all right.
Okay, am I back?
You're back.
Okay, good deal. Good deal. I know I only had one thing to remember, and I couldn't do it, right? So he said, so
you're doing great.
So the question becomes, are we measuring the right things? And so I think the best example of that is Blockbuster Video and Netflix. So if anybody here is over 25, you probably remember the days when there was a Blockbuster on every corner. And you probably remember a time when there was no such thing as a Netflix. So what happened? Essentially, Blockbuster failed the strategy game. They were measuring things. I have no, at their heyday in 2004, they were at 9,000 stores, 60,000 employees, about 7 or 8 billion in revenue. And at that time in 2004, Netflix was just getting started. But the interesting thing about failing the strategy question is that when Netflix got started in 2004, prior to 2004 and up to 2004, they were still mailing CDs, right? So, but their name was Netflix. So the founder knew that the mailing of CDs was just sort of the stepping stone to the ultimate strategy, and that was the ability to deliver not CDs, but entertainment via the web. So as we have the basic conversation about strategy with our clients, the strategy framework is pretty simple, pretty straightforward. Three basic questions. Where are we today? Where do we want to go? And how do we get there? Where are we today? Current state. Where do we want to go? That's our strategic direction. How do we get there? That's the roadmap. And again, the framework is very simple. But the really hard part is building out that roadmap and getting real honest about where we are and where we want to go. Strategy is about questions. And more succinctly, it's about asking hard questions, developing the answers, and creating insights off of those questions and the answers that we've developed. As a business coach, as a trusted advisor, this is probably the one area where I'm able to provide the greatest amount of value to our client base. And that happens because anytime you've been inside of a company or an organization for more than 90 days, you sort of begin to drink the Kool-Aid, and you start to say things like that doesn't work here, or we can't do that, or we've always done it this way. So as a coach, as a trusted advisor, we force the issue around asking and answering the difficult questions. So at the end of that strategy process, or that questioning process and that discussion process, you'll gather just a bunch of information. And the easiest, even though there's a lot of tools out there, probably one of the simplest, most straightforward tools is what we call the SWOT analysis. And as you can see from the chart there, SWOT stands for strengths, weaknesses, opportunities, and threats. The strengths and weaknesses typically are those things internal to the firm. Examples might be, what does the company do well? What are its core competencies? What are some of the differentiators? Whereas weaknesses might be internal challenges, team issues, service delivery, growth, profitability, which are some of the more common ones. Think of strengths and weaknesses as typically those issues that the company has control over and can influence greatly. Now, if you were to stop there, you could probably have good strategy, but you would never have great strategy, because it's extremely important that you look at those things that either you have little or no control over, and that's why we talk about the concept of opportunities and threats. And as you were able to infer, those are things that are happening external to the firm. Typically, things represent a typical opportunity might be a growth opportunity, an acquisition opportunity, buying of a competitor, whereas the threat might be things that are happening in the industry that you have no control over, changing customer preferences, regulations, or technology shift. So if we were to take the SWOT analysis and go back to our Blockbuster example, what might that SWOT matrix have looked like back in the 2004 timeframe? So let's take a look here. So if we look at strengths, very strong brand, again, $8-9 billion in revenue, strong geographic coverage, 6,000 stores across the United States, and they had an aggressive international expansion program in place as well. A workforce of 90,000 people, strong finances, they're throwing off a lot of cash, and probably at that time, given what was going on, all indications were they had a very, very strong leadership team. What might have been some of their weakness? Even though it seemed like they had a store on every corner, that really wasn't the case. So that I'm sure when they did their annual planning, there was probably some areas or geographies where there were gaps, and there's probably a plan to sort of fix that, be either buying a company or adding new stores. Late fees were a weakness. In that 2003, in that late 90 time frame, major portions of their net profit were coming from late fees. In fact, the story has it that the founder of Netflix, he was so enraged by the $40 he had to pay in late fees on renting of Apollo 13. That's what drove him to start Netflix. I don't know if that's urban legend or the truth, but nevertheless, that was clearly a weakness in this particular space. The business model could be a weakness. It was all retail, very little technology or alternate ways to deliver. And then, of course, growth was always going to be problematic in a retail environment. So for every time that they wanted to, Blockbuster needed to expand, they had to go out and get new stores, build inventory, so on and so forth. Again, very, very, very capital intensive. So if we look at the threats that Blockbuster should have been looking at in 2004, it's the new delivery models. Obviously, Netflix was doing mail. back in the 80s, the cable companies were talking about delivering movies on demand, and then obviously the internet was gaining speed. Let's say gaining speed, no pun intended. But the bandwidth was expanding, and the rate of delivery was expanding. So it was further enabling the opportunity for Netflix. And then of course you had angry clients, and then who knows? The studios could have banded together and said, hey, we're gonna do our own version of Blockbuster since we own the content, and we'll put those guys out of business. So the opportunities that Blockbuster should have been looking at that in that time frame is an investment strategy. Where can we invest dollars outside of our core business to ensure that we're relevant, well into the late mid 2000s. Lots of opportunities. They could have joint ventured. They could have bought Netflix. Netflix was offered to Blockbuster several times in that 03 to 05 time frame. They could have bought Netflix for $50 million. Netflix now is on the New York Stock Exchange is a $50 billion company. Leapfrog the technology. Netflix was doing mail CDs. Did that create an opportunity or a window since Blockbuster had a lot of cash that they could have leapfrogged the mailing and gone straight to, or maybe bought a cable company, or really ramped up the investment in the internet delivery model. And of course, there's always opportunity to possibly split the company. You put your legacy retail business into one company, and then you put your new ventures or your sort of Netflix type businesses into another company. So these are all kinds of questions that they should have been asking in developing strategies. But the decision was made at that time. I'm sure they had lots of good information about that, was to double down on the retail model, not focus on what Netflix was doing, and full steam ahead with the retail model. And I think the rest is history. So if Blockbuster had acquired Netflix, I'm pretty sure that things would have gone great for Blockbuster, but it would have never achieved. Netflix would have never achieved the greatness that it's realizing now, being a standalone independent company. Because not only are they at $8 billion in revenue, they've got 3,500 employees, worth $50 billion, and they've got 75 million subscribers on a global basis. So poll question number 2, I'm going to turn that back to over to Wendy. So for our second poll question.
Okay, so the second poll question should have popped up on your screen by now. And so what are your top external business concerns for the next 12 to 18 months? You can go ahead and pick one of those, and I'll leave the poll question up for a bit to give everyone a chance to respond. Okay.
Wow, great. That's great.
Okay,
Okay, you ready?
Go ahead and close the poll and put the presentation back up. And Austin, don't forget to take over as a presenter.
I got it. I got it. Good deal. Good deal. Well, that's interesting. Competitive landscape and what was the other one? What were the top two? Competitive landscape and...
Let me check. It's competitive landscape and technology-driven change.
Great, good. Definitely opportunity. In fact, both opportunities. Clearly, one is a threat, and the other one is clearly an opportunity. So, our last topic that we'll cover this morning or this afternoon will be the concept of team. And so, let's go back to the Blockbuster model for just a second. So, if you think about what was going on in Blockbuster when they were sort of imploding, you've got 60,000 employees out there on the front line, and and over the course of a year they're probably having tens of millions of interactions with clients, customers, and I'm sure these customers weren't shy. I'm sure there's, every third customer saying is, "Hey, how come you guys aren't doing something like what Netflix is doing?" Or, "Hey, I'm shifting my spend from Blockbuster to Netflix for these whatever number of reasons, convenience, price point, so on and so forth." So, what kind of a company that that has all those 60,000 listening posts out there doesn't do something with that information? I think it's simply stated, it's the unenlightened company. It goes back to culture. Obviously, in the Blockbuster environment, there wasn't a culture. Can you guys still see me? I got a weird message here.
As far as the presentation goes?
Yeah. Hang on a second. Okay. Everything's okay on your end?
Yes.
Okay, yeah, I got a weird message. Okay, got it. I'm good. So what it goes back to culture. Obviously, there was a culture, there was an environment there that whatever information came from folks in the field or other folks that were closer to the customer, that information was either discounted or was totally ignored. Or there's no way that because if it had been acted upon, there's no way that Blockbuster would have fallen that quickly to Netflix. So what does that mean for our enterprise? For our enterprises, it's this whole concept of the power of the team. So there's an organization called the Gallup Organization. You guys are probably very familiar with it. They do a lot of consulting and survey work. But a few years back, they really latched on this whole concept of the empowered team member, the empowered employee, the engaged employee. And so what they'll do is they'll work with a company, an organization, and they'll ask this series of 12 questions over a period of quarters, months, years, and that sort of thing to understand what's going on in that client environment. So there's 12 questions, but I'm only going to cover what I believe are the top 4. The question they ask of the employee: do you have the right equipment to do your work right, do it correctly? The second top question: do you know what is expected of you at work? Do you have the opportunity to do daily what you do best? Have you received praise or recognition in the last 7 days? Now, I got to tell you, the first time I read these, I thought that these were so basic. And the other 12 are, kind of along the same vein. But as I thought about it, many leaders that I've worked with over the years maybe never had some basic training in leadership development, how to get the best out of your people, and so on and so forth. Or they were pinching pennies, so they didn't give. It was okay for the people to work on 20-year-old technology. Was I able to do my best work? Well, hey, Austin's a jack of all trades. We'll just put him where we need him. So I never got an opportunity to really do what I really enjoy doing, because if I'm doing what I really enjoy doing, I'm going to have that opportunity to do my best work. And of course, depending on the environment, sometimes if I can get could have gotten recognition every 7 years, I felt that was a pretty good deal. So what is the implication for the management, for leadership, for the business owner? I put that picture in the top left. I think we all know that yelling at our folks doesn't serve us well. But really, the message that I'm trying to deliver here is that one-way communication doesn't work. The leader, the business owner, my way or the highway, do as I say, those sorts of things, that just doesn't work in our current environment. The leader's got to take on that role of coach, of mentor. There's one of my favorite coaches, John Wooden, very, very successful as coach. But if you read anything about his style, he would tell you that he was more of a teacher than he was a coach. Because if you think about it, in this whole world of getting our employees engaged, it's about delivering them the right resources, giving them the praise, helping them set direction, helping them understand how important they are to the bigger goals and vision of the company. So this may sound a little touchy-feely, but let's talk about the economics of the engaged employee. We all have our own metrics, but if you're able to hang on to employees longer, decrease turnover, have to hire less people, what does that mean for your specific enterprise? For most of you, that means more money in your pocket, right? And most importantly, it also helps you to build a strong platform to do great things in the future. So I'm going to end there. We could spend all day on that, on the whole team concept, but just a couple things I'd like to leave you with in summary is that the importance of creating a harmonious systems and metrics that are strong in their own regard, but are also play well with the other systems and metrics in place. Strategy frameworks are simple, but it's the hard questions and building out the roadmap and taking action against the roadmap is where the challenges lie. And as I've talked about the Blockbuster example, our greatest tool for insights and strategy execution lies within the power of our team. So I'm going to wrap up here and turn it back over to Daryl, but before I do, I've got just one simple request. I'm a shameless marketer, so if there's if there's something here that resonated with you or you'd like to chat about a little bit further, there's my contact information. I'm also going to offer to the folks on the phone today a 45-minute complimentary strategy review where we look at some of the topics that we covered here or others that are important to you and drill down a little bit further. I'd also like to offer that if you'd like to do a similar type of presentation for your client group or within a professional trade or association that you belong to, I'd be happy to do that on your behalf. So let me turn it over to Daryl at this time.
Okay, thank you, Austin. Before we, let me say thank you for sharing those insights. I know that that my client group will have some great takeaways from your presentation. I definitely would like to encourage all of you to take Austin up on the complimentary business review he offered. We did a shortened version of this over lunch a few weeks ago, and I can tell you that the discussion we had really helped me in crystallizing the vision for our firm. So it's definitely time well spent. So I encourage you to do that. Now, before we get into the second part of the presentation on the tax update, we wanted to allow a few minutes for a couple of questions, and then we'll also have a Q&A session at the end after the tax update. So, Wendy, do you have the questions for Austin?
Daryl, this is Ellen. There are 3 unanswered questions, but maybe in the interest of time, one of them is for Austin is when is a good time or how often should you have a SWOT analysis?
That's a great question. At a minimum, it should be on an annual basis because typically what will happen is, particularly if you're doing budgeting, it's nice to do the SWOT analysis sort of before that, because in that, as we talk about that opportunity, threat, and weakness section, those typically are opportunities where you might want to set some dollars aside for investment purposes. So definitely before your budget cycle. If you're in a rapidly evolving environment, either you're growing very fast or the underlying technology industry is changing, you might want to make that as part of your quarterly business review process to ensure that you're capturing the changes in the marketplace. Because unfortunately that's what happens to a lot of businesses, is that we get so caught up in doing stuff and serving our customers and clients, we don't take that step back to say, okay, where are we really going, and what do we need to do to make sure that we are able to capture as much growth as possible, and more importantly, get out in front of that growth.
Okay. All right. So thank you, Austin. I'm going to
sure.
We'll make sure to share your contact information again. And like we said, if you want that complimentary review, go ahead and reach out to Austin. So we're going to go into the tax update, and just so that we can, try to make sure that we finish on time here. One thing I'd like to say, I should have said at the beginning, is Happy New Year, 2017, and really thank you for the opportunity for us to share a few tax updates for you in the new year, as well as those that took effect last year. So we're not going to try to get into every tax change, but that happened. But we'll cover a few. But before we get started, we got another poll question. And Wendy, would you go ahead and populate that?
Yes, I can go ahead and do that. Okay.
Yeah, so last year that was the first year we used Intuit Link. And for those of you that are unaware, Intuit Link is our online portal for collecting your tax documents and delivering your tax return. We also, as many of you know, we also have a secure client portal on our website, but primarily use that for our accounting clients. So so if you've used Intuit Link, we just wanted to get some quick feedback on that.
Okay.
All right, great. Great. That's good to hear for those that used it, because we'll continue to use that at least for this tax season. Okay, let me take over again. Come back to the slide. Okay. All right, so those of you that may not be aware, we do have a monthly newsletter. And what we try to do with our monthly newsletter is provide you information that, that's going to be helpful for you in planning and managing your business. There are 4 to 5 brief articles each month that are provided via email to you. And, it's amazing how many times that I've received a client question and been able to refer them to an article in the newsletter. And, it usually presents it better than I can, and in plain English. So to subscribe to our newsletter, all you have to do is go anywhere on our website. Any page has this subscribe button at the top. And what will happen is you'll get an email where you'll need to confirm that you want to subscribe. And again, you can unsubscribe at any time, but we definitely encourage you to subscribe to the newsletter, because just this past November and December, there were articles about the tax updates for 2016, the year-end tax planning type of updates, and if you were a subscriber, you would have gotten that information. So like I say, if you want to stay update, and it also may spark a question or two, go ahead and subscribe. Also, you may know you may not know that we're on social media. We are on Facebook, Twitter, and LinkedIn, and you can find us on Facebook and like our page at DWG CPA. You can follow us on Twitter, or you can connect to me via LinkedIn. I will also accept personal friend requests as well, if you want to get a flavor of what I do when I take off my CPA hat. So it's a little bit different, but definitely we want to make sure that you have an avenue to stay connected. All right, 2017. Wow. So far for 2016, there weren't very many big tax changes, and that's typical when you have an election year. There was a lot of talk. There has been a lot of talk in the news about what the president-elect will do, what the House Republican tax reform blueprint looks like, technical corrections, and various proposals to reform the IRS. But until laws are passed by Congress, these provisions are just talk. So we'll do what we can to keep you informed on the changes as they happen. We're going to go over a few key updates. And like I say, there were on the newsletter or in our newsletter for November and December, we talked about year-end tips. And in January, there's an article titled Tax Changes for 2017. And I definitely suggest that you go there to get updated there. Okay, so a big change that happened relates to due dates, and that probably impacts us more. Well, I guess it impacts us both. Many of the more than 100 statutory changes in 2015 became effective in 2016, such as the new due dates for a few commonly used tax forms. So looking at the due dates here, you'll see that normally a calendar year partnership return was due on April 15th. And now it will be due by March 15th. So that's partnerships. Also note that the calendar year corporate return, normally due March 15th, is now due on April 15th. Now the extended due dates will remain the same. So they'll be September 15th for those entities, but we'll definitely be talking to you if you own a C corporation or a partnership. It definitely is important to be sure that your calendars and thinking are adjusted to meet the new return deadlines, particularly those that are earlier than we've had in the past, as there are significant penalties for filing these tax forms late. In addition, the Form W-2 and 1099 miscellaneous forms, those forms are now due to the government by the end of January, and that's the same time they're due to the worker. So rather than at the end of February, or if you filed electronically at the end of March, that we're going to have to send those into the IRS or the Social Security Administration at the end of January. So this change was made so the IRS would have more accurate information in its systems as tax returns are being filed. And the focus really is on addressing the growing problem of tax identity theft. And I suppose the plan is that if they have that information in the system, that will reduce the likelihood of somebody filing a fraudulent return. On the tax brackets for 2016, the marginal income tax brackets were adjusted slightly from 2015 because there's been little inflation. The lowest bracket is 10% and the highest bracket is 39.6. Again, there's much talk about tax law changes with the new administration coming into office in the next couple of weeks, but that should not have any effect on the 2016 tax returns. As with many issues, we'll just have to wait and see what happens in 2017. Affordable Care Act. The fee for the penalty for not having health insurance increased again in 2016. So uninsured individuals will now have to pay a fine of the higher of 2.5% of income, or $695 per uninsured person, and that's $347 per child under 18. For future years, the fee will increase with inflation. Open enrollment in 2016 started on November 1st and runs through January 31st. There's also a premium tax credit that's there, and anybody impacted by that, we can talk to you separately regarding that. Alternative minimum tax. I know some of you have seen that on your return, maybe not be aware how it works, but the alternative minimum tax exists to be sure that everyone pays a minimum level of tax despite using various exclusions, deductions, and credits to reduce the regular tax. The alternative minimum tax tends to affect higher middle income taxpayers, and in computing the AMT, individuals do not get to deduct personal exemptions, state taxes, home interest, and other deductions. Ultimately, it ends up being a two-rate tax structure where the rates are basically 26 and 28%. And if the alternative minimum tax is higher than the regular tax, the higher amount is what's owed. Okay. All right. Getting into poll question number 4.
Okay, let me go ahead and pull that one up.
This will be a fun one for everyone at this time of year. Pun intended. Pun intended.
That's CPA humor, right?
Yeah, that's right. Yeah.
Oh,
Well, go ahead, Wendy.
so poll question. So will you have paid 90% of your estimated tax liability by January 15th? As we know, the IRS doesn't want to get a lump sum payment on April 15th. They want it every quarter. So if you happen to know that by January 15th where you'll be, just go ahead and click the button. Okay.
All right. Well, that's definitely good to see, and just keep in mind that you have time to make that payment. If you come up and your estimate is or your estimate is a little bit more than you expected, but definitely you want to make sure you take care of the estimated taxes on a quarterly basis. Okay. So many states disallow deductions that can be taken on a federal return and may tax individuals or tax income that is exempt from federal tax. For example, some states have more restrictive net operating loss carryover rules than the federal government and do not allow favorable tax treatment for long-term capital gains. Also, many states do not use the higher Section 179 expense amounts of allowing bonus depreciation. So it's important that you understand what the state tax rules are. And as mentioned here, the sales tax rates, or sales tax rules vary from state to state. And so if you're operating in other states, you definitely want to make sure that that we do some planning around that activity. So the top issues for small businesses, are listed here. Quarterly tax planning for your business with your tax advisor, DWG, will likely provide you ways to save on your tax bill for 2016 and 2017. It will be helpful if your books and records are in good shape going into that planning meeting, so we can help you determine if it makes sense to take steps such as purchasing additional equipment to take advantage of the Section 179 expensing provisions, paying bonuses to management or employees, or making retirement contributions. So careful planning that takes into account the effect that these business deductions have both on the businesses or on the business and on individuals, can make a big difference when April 18th rolls around. So why is tax day April 18th and not April 15th again this year? So the regular tax return filing deadline is April 15th. But since April 15th is on a Saturday this year and Washington, D.C. has Emancipation Day holiday on the 17th, instead of the 16th when it normally is, tax day is on the following Tuesday. So you get a few extra days. I'm sorry, we get a few extra
we get a few extra days.
Said it right. We all do. Okay, so and the SHOP marketplace. So SHOP stands for the Small Business Health Options Program Marketplace, and it helps the small businesses provide health coverage to their employees. The SHOP marketplace is open to employers with 50 or fewer full-time equivalent employees, including nonprofit organizations. You can enroll in SHOP at any point throughout the year. And if you need more information on the SHOP marketplace, let us know. retirement plans. I will say that most of our long-term clients know that retirement planning is one of our focal areas, or making sure that that is a key of your tax savings or deferment plan. And so I think that's something that you're familiar with. But there are definitely options that you need to consider there, and it's important that to consider whether your business will grow to include more employees when you select the plan, as some plans have limits on the number of participants. And on individual retirement contributions, none of that has changed really in 2016 or 2017 from the prior year. So those limits remain the same going into 2017. All right, I pushed right on through. And so now we're down to the last poll question.
Okay. Let me
and
bring it up.
okay.
Okay. So what is the most important accounting service for you? So would it be accounting reports like monthly, quarterly kind of financial compilation reports, unlimited consultations, tax planning, or tax compliance? Whether it's sales tax, payroll tax, when we have to submit 1099s, W-2s, all of that stuff. Okay, so I'll leave it up. Okay.
You leave it up. Okay.
Yeah, so it's up. So we pretty much got most of the responses in. Do you want to go ahead and
Okay. Yep. I
okay.
will. Okay. Okay. Well, before we move on to the Q&A, I just want to make one final comment. Um, so many things we do have tax consequences that we often don't think about it until it's too late. Changing jobs, having children, planning for retirement, exercising stock options, receiving a promotion, opting into a employer-provided retirement plan, and so forth. So I could go on, but you get the idea. Today we kind of touched on a few of the major topics at a very high level, but with the ever-changing tax laws and changes to your particular situation, it's always a good idea to review how the tax laws affect you. That is where we can help. Now, if this is what we do year-round. We can answer quick questions, or provide an in-depth tax projection to help you anticipate how these new tax laws will affect your returns. So don't hesitate to reach out to us after today's presentation if you'd like to discuss something in more detail. And with that, we'll move on to the Q&A, and we'll try to answer a couple of questions here, and then we'll close out. And we'll stay on to try to make sure that we get through the rest of the Q&A questions if anyone wants to hang on for that. Okay, so questions.
Daryl, you talked about the tax deadlines. When does tax season start?
The tax season officially starts on January 23rd. That's when the IRS opens up the time for us to be able to file returns. I mean, it technically has, from our standpoint, it's already started, obviously, but from the IRS, it'd be January 23rd. Now, I should add to that, if you are due a refund, you won't be able to get that refund until I think sometime in mid-February.
That's correct.
Because this year the IRS has decided, because they are waiting to get those W-2s at the end of January, they're going to delay issuing refunds for everyone until mid-February.
Okay.
Any other questions? You want to go ahead and close out? Okay. Well, I'll say this, and again, we're gonna hang on and continue on the questions, but for the sake of time, and our goal was in doing this webinar is to keep it under an hour. This is our first installment of it, so we're gonna continue to work and build on that as we go through the year. I want to definitely thank you all for your attention and your presence today. It was a pleasure being with you, and I welcome you to contact me with questions anytime. We would love the opportunity to talk with you about how we can be of service to your business. Next month, we plan to cover small business banking, building a better relationship. We also plan to host 2 to 3 quarterly client appreciation mixers, and more information is to come on that. Please be on the lookout for your invitations. So again, thank you, and with that, we're going to go ahead and close out. Well, actually, we'll go ahead and. Were there any other questions from our participants that we need to answer now?
No other questions.
Okay. All right. Again, if you have questions that you want to ask one-on-one, or you want to set up a one-on-one meeting, let us know. And thank you, and have a great weekend.
Thanks, Daryl.
All right. Thank you, Austin.